It sees what we can't.
Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Yes. Listen, babe. Listen, babe. Listen, babe. Yes. Listen, babe. Listen, babe. Listen, babe. Yes.
Now, when you first get introduced to trading and you read the forums and maybe you've gotten your hands on a few technical books or listened to a few mentors speaking on YouTube or on TV at that, and maybe some of these questions popped up because this is basically the same questions that I came upon as a new trader years ago. And I saw all these technical tools and these applications that one could use for charting, and I always wondered what specific technical tools do I use? Okay, and what time frames do I use? And what tools do I use during those specific time frames? And really, where do I begin? Maybe you've had those same questions come across in your own development. Or maybe that's where you're struggling right now as a new trader. Maybe you just started looking at Forex or, trading in nature as a whole, and you're struggling with this very foundation as to where to begin using the technical tools and timeframes. Well, this presentation is going to focus on defining specific technical tools, assigning specific tools to specific time frames, and I'm going to illustrate how you can set up layouts and share with you some time-saving uses of MT4 templates. All right, first, the monthly chart. Okay, the monthly time frame is the largest macro view that we work with in technical analysis. And when we open our charts up on a monthly time frame, you want to have a designated chart specifically for your monthly, okay? Because you're not going to use it too much in terms of everyday use, but at least once a week, maybe midweek, you'll refer to it. But when you're using this chart, you want to be using it for referencing the higher time frame key support and resistance levels. You want to be looking for your Fibonacci levels, measuring highs to lows, looking for retracements and even extensions, looking for classic price patterns, trends, directional probabilities on the higher time frame tend to have a higher magnitude in duration versus the intraday charting concepts. So generally, moves that are underway on the monthly chart tend to stay underway for a great period of time. So a lot of your directional premise is going to derive and originate from that monthly chart. And using a monthly momentum indicator is useful when you're using um, trending concepts. So when the monthly chart is trending, if you see a oversold condition moving out of oversold into an upward trending um, indication on your momentum indicator, it could be a stochastic, it could be a MACD. When you see that, it adds confirmation to hopefully your already established premise that the market should be bouncing off of support levels and moving higher comparably. But the monthly time frame, your focal points are really going to be but the monthly time frame, really your focal points are going to be trying to determine the higher time frame support and resistance levels that you'll carry down through all the way to your daily intraday charts. You're going to be identifying key Fibonacci levels based on key price swings high and low, looking for extensions and retracements, and you're going to be really trying to do a macro view and analysis on determining the long-term direction based on the monthly chart. You're going to be monitoring long-term sentiment as well based on overbought, oversold, used in your momentum indicator. Again, it could be stochastic, it could be RSI, Williams percent R, or even a MACD. The weekly chart. Okay, the weekly time frame. Your focus is going to be again moving that monthly support and resistance levels down to your weekly, and by focusing on the key support and resistance levels that you see on the weekly chart, you'll have a higher degree of higher time frame support and resistance levels, both those levels seen on the monthly and now the new levels that are apparent using the weekly chart. Now we're going to be looking at market structure more efficiently because you'll have a better gauge on price swings using the weekly chart and having market structure. Okay, and much like we did on the monthly chart, Fibonacci levels will be derived based on the swing highs and swing lows, looking for extensions and or retracement levels to look for convergence on lower time frames and or targets. Now on the weekly chart, you're going to be looking for your COT analysis with this time frame. Okay, you'll be following the net traders position. Okay, and I use the pricecharts.com. You could use any service that you find suitable for your own tastes. But like I said, I've grown an affinity towards these charts. I just like them. You're not limited to just this for these concepts to work. It's just a matter of preference on my part. But you're studying the net traders position on a weekly chart. Okay, not on any other time frame. You focus it on the weekly. And having a weekly momentum indicator, again, much like the monthly, a stochastic MACD, RSI, or even a percent R is effective as well as momentum and sentiment purposes. Focal points, obviously, for the weekly chart is going to be determining the higher time frame support resistance levels on this time frame and transposing those that you find on the monthly chart down to the weekly as well. You're going to be identifying market structure, key swings, and high and low, okay, and identifying key resistance and support levels based on Fibonacci levels as well. So we're going to be looking for convergences, and you're going to be trying to determine what the commercial trader's trend is based on the COT. It's not just simply are we overbought, oversold, and are we trending higher or lower, but we're also going to add to the fact that we have to understand what the traders are doing in the commercial realm. Just because the market is been in a downtrend, if there's a high level extreme net long position, that could be an indication that the commercials are pricing out a low in the marketplace, and being a bear may not be advantageous for you, and vice versa. Looking for and obviously, much like we did on the monthly, monitoring the long-term sentiment based on momentum and or um, market sentiment or similar concepts that arrive at that. Okay, the daily time frame. Okay, on your daily chart, obviously we would transpose our monthly and weekly key support resistance levels because that's paramount in our trading. Again, much like we did on the weekly, market structure is going to be very, very effective in this time frame. You'll start seeing a lot more symmetry in the market with this specific time frame, and much like we had in our monthly and weekly, Fibonacci is always going to be present in every time frame we trade, looking for extensions and retracements. And now on this time frame, we add the concept of open interest. So you're looking at open interest, which is total open interest on the specific currency pair that's traded. Okay, in other words, the cable, you're going to be looking at the British pound futures contract in the futures market, and you'll be following the total open interest. Okay, you're not looking at just the open interest for the nearby, you're looking at total open interest. Okay, and obviously we learned that open interest is an indication of commercial net short selling. The higher the open interest, the greater the net short position or net selling that the commercial traders are doing. And if there's a drop in open interest, that could be a indication that they are lessening their shorts, and that could be bullish in nature. But the open interest concept is applied to your daily time frame. A momentum indicator as well is useful on this time frame. Again, you could be as simple as a RSI, Williams percent R, stochastic, or MACD. It's not a a hard and fast rule that has to be one or the other. It's just a matter of preference. A simple overbought, oversold, and divergence is what you're looking for, and that will be a preference that you have determined for you as a trader. The focal points for the daily chart, obviously, you're going to be trying to determine the intermediate term time frame, support and resistance levels, and looking at the higher time frame weekly and monthly support and resistance levels as well. So there's going to be new levels determined and arrived at with each level as we go lower. It's just a matter of looking confluences between the levels, and the greater the confluence, the higher the degree the support and resistance level is going to be. You're going to be identifying market structure, key swings, highs, and lows, and within those keys, highs, swings, and lows, you're going to be looking at Fibonacci extensions and retracement levels, looking for convergences. We're going to be trying to define the commercial trader's open interest. Okay, are they adding to shorts or are they lessening shorts? Okay, based on the relationship of open interest and price action. We're going to be monitoring intermediate term sentiment through your momentum indicator, and you'd be monitoring correlation concepts now within this time frame. SMT divergence, USDX, SMT as well. All right, the 4-hour time frame. Okay, where your focus is for this time frame, obviously the higher time frame key support and resistance levels transposed to this time frame as well. Now we're going to introduce the monthly trinity. Okay, we're looking at the previous month's range, high and low, and all of the matrix levels that make up my ICT trinity level indicator. And I'm not going to go into that here. Obviously, there's its own teaching on it. And if you're new and you're just watching this, the Trinity tools will be made available to you as well in the thread on Baby Pips. So if you see this video and you're scratching your head, what is a Trinity indicator? You'll find it on Baby Pips threads. Millionaires Traders Guild thread in the forum section on babypips.com. We'll be looking at the Fibonacci levels as well on the 4-hour based on key highs and lows and the swings. And now we're going to be introducing, in this time frame, the pivot points, but we're going to be utilizing the monthly pivots only on the 4-hour. Okay, because you don't want to have all these levels and lines on your chart because you won't be able to see price action, which is the more important tenet to your analysis, not all these indicators. The monthly pivot points you'll plot on your 4-hour chart. Okay, obviously market structure is a crucial factor as well in this time frame as well, looking for trend, consolidation, reversal, market profiling, all of those things dovetail nicely with this this premise. In market structure, are we bullish or bearish? Have we put in an intermediate term high or low, and looking to trade comparably? Price patterns, simple classic price patterns, ascending triangles, pennants, head and shoulders, bull flags, bear flags, anything of that nature, ICT holy grails, optimal trade entries, reflections, turtle soups, anything that we use as a price pattern trader, we could utilize obviously on the 4-hour time frame. Now, obviously, price patterns aren't limited just to 4-hour; it's in every time frame. But you're really going to be heavily focused on the 4-hour because now we're getting closer to the dynamic trend of the market in the immediate term. Okay, and the 4-hour is going to be a very dynamic time frame for you as a trader, whether you're a position trader, short-term trader, day trader. This time frame is very strong because it gives you the best of both worlds, both long-term and intermediate term, but it's still applicable for day trading as well. And then obviously momentum indicators used on this time frame is advantageous as well. And your focal points obviously for the 4-hour is you're going to be determining its own support and resistance levels for this time frame for the short term, and you're going to be identifying the market structure, key highs and lows and swings within it, and utilizing those key swings up and down. You'd be pulling your Fibonacci levels for retracements and extensions and looking for confluences, and you'd be defining buy and sell pivot zones based on the monthly pivots, again stressing the fact that we were plotting monthly pivots only on the 4-hour time frame. You're going to be monitoring the intermediate term sentiment based on your overbought oversold indicator and momentum, and again it could be stochastics, RSI, Williams R, MACD, whatever your preference is. I'm not going to give you a box to be within. you determine what indicator you want to use, but only pick one. You don't need 15 of them, okay? And obviously, you'd be defining the overbought and oversold basis on the previous month's range, okay? And that's the monthly trinity. Where are we in relation to the previous month's range? Are we near the high? Are we near the low? Are we in the middle? All those things are inputs that we have to have as traders to add a little bit more credibility to the signals that we're probably seeing on the lower time frame. Okay, the 1 hour time frame, 60-minute chart. Obviously, all the higher time frame support resistance levels are going to be transposed to this time frame as well. But now we're going to introduce the weekly trinity, the ICT weekly trinity, looking at the previous week's high and low and breaking it down and giving the matrix levels. Fibonacci levels also, much like we do in every other time frame. And now we're going to be looking at the pivot points on a weekly basis. So on the 60-minute chart, I plot the weekly pivots. Okay, so 1 hour charts, weekly pivots. 4 hour charts, monthly pivots. So if you're looking for pivots, that's where I utilize the higher time frame pivot points. Monthlies on the 4 hour, weeklies on the 60-minute or 1 hour chart. Market structure is also reflected at this time frame as well, looking for the overall price structure. Are we moving higher or lower? Consolidating? Are we getting ready to reverse? Do your market profiling here as well. It'll be advantageous to you to determine where you're at in the higher time frame premise, and trading in that market structure is going to help you have higher odds for your trade to pan out in a more profitable manner. Price patterns as well, classic in nature and individualized and specialty. And momentum indicator also plotted on a 60-minute chart. Now, the MACD and stochastics, I think, do well with this one. So if there's any one time frame that I'm going to more or less advise a specific momentum indicator, it'd be MACD and or stochastics for this particular hourly time frame. Now the focal points for the 60-minute chart is obviously you're going to be determining its own short-term support and resistance levels. Not only having the higher time frame transposed to this time frame, but you're looking for the specific short-term and the short-term support and resistance levels for this time frame in 60-minute, and identifying the market structure within this time frame, looking at key highs and lows and swings within it, and pulling your Fibonacci between those swings, looking for retracements and extensions. And you're going to be trying to define buy and sell pivot zones based on the weekly pivots. Okay, again, the weekly pivot points that are being plotted on the 60-minute chart. Where are we at in relationship to the weekly pivot matrix? Are we above the central pivot for sell zone? Or are we below the central pivot for the buy zone? Okay, and you're going to be monitoring the short-term sentiment based on your momentum indicator, and you're going to be defining your overbought oversold basis, the previous week's range, and that's the weekly ICT trinity. All right, the 15-minute chart. Now, obviously, again, the higher time frame support and resistance levels will be transposed to this level and of time. And now we're going to be adding the previous 3 days highs and lows. Okay, and by having the last 3 days highs and lows, it'll help you trade within a daily fractal high or low. So if you have a higher time frame premise, you have a higher time frame market structure that you identified, you can trade within that. As for instance, if you're bullish on the marketplace and you see a fractal low forming, okay, you'll be able to see it clearly within a 15-minute chart, and you'll be able to reference where you're at in terms of that market structure and look for optimal trade entry buys, reflection buys, okay, or other bullish patterns that would put you long in the marketplace to trade within that higher time frame premise, and vice versa, looking for shorts in a bearish higher time frame market structure. Fibonacci levels are going to be pulled from key support resistance levels and highs and lows as well, much like we did in all the previous time frames. Pivot points now are going to be on the daily basis. Now they are going to be ran off of GMT time and New York midnight time. I toggle between the two and I look for confluences. You can be a hard and fast GMT pivot man and that, or lady, in deference to the women, sorry. The New York midnight time frame could be your pivot choice as well. Me, because I understand that price isn't going to be always black and white. There's a gray area we have to live within, so I have to be flexible and I'll toggle between the two, GMT and New York. And I do this toggling between the sessions. In other words, I'll be looking at GMT up until we get to midnight time frame during Asia, and then I'll start looking at New York pivots when we go into Frankfurt and London, and look for some confluences, and but still referencing the previous GMT pivots as well. And then in New York also I'll reference the GMT pivots and New York also to see if there's any disparity or confluences where I could elect to choose one or the other. SMT concepts, USDX, and correlated pair SMTs will be very notable on this time frame. So that's where we're going to spend a lot of time looking at key highs and lows and referencing failure swings between the two for uh, intermarket analysis. The Asian range is going to be utilized in the 15-minute time frame. That's 0 GMT to 5 GMT. You have that plotted on your chart. That's going to be the initial high and low of the day, so you're going to be implementing that on the 15-minute time frame. And obviously looking for price patterns, optimal trade entries, reflections, classic chart patterns as well. Your focal points obviously are looking for the intraday support resistance levels for this particular time frame and also the higher time frame as well. You're going to be identifying the market structure within this time frame to trade in sync with the higher time frame market structure. Okay, so that'll hopefully get you in sync with the higher time frame macro directional premise, where most of the institutional and high-level banking flows will be moving the market anyway, and you want to be riding the coattails of those participants, not just getting in there, throwing the dice, hopefully being right on, assumption that your chart may be indicating. You want to be trading on those higher time frame charts. Okay. Obviously, looking for key swings in the marketplace, highs and lows. You'd be pulling your Fibonacci levels for extensions and retracements, looking for confluences. Defining buy and sell pivot zones based on the daily pivots. Again, 15-minute chart is going to have the daily pivots. The 60-minute will have the weekly pivots. 4-hour has the monthly pivots. Okay. And now you're going to delineate the initial range high and low basis the Asian range indicator. Okay, that's going to be plotting the 0 GMT to 5 GMT. That window of opportunity, that is the accumulation distribution phase for the day. That's where they are establishing the beginning of the daily range. And what we do based on that, breaking out falsely or confirmed above or below the high and low of that will obviously be taught during the London Open portion of this presentation, part 7. Okay, so this is only part 4, so you got a couple more stages to get to that. But obviously, in this stage of time frame, 15-minute, you're going to be looking to define fractal formations and swing points. Okay, now it's not limited to the 15-minute chart. Obviously, you can start to break down your fractal formations and daily highs and lows, looking at the last 3 in the 60-minute chart. Okay, for the sake of clarity on my charts, I like the 15-minute chart if the price action will permit. If it gets a little cluttered and it's real choppy, I'll zoom out to a 60-minute chart and use this same analysis looking at fractal formations based on the last 3 days highs and lows. All right, finally the 5-minute time frame. This is the smallest time frame that I utilize in my trading. And the focal points obviously is using the higher time frame support resistance levels transposed down to this time frame. Again, focusing on the previous 3 days highs and lows, pulling your Fibonacci from your swing highs and swing lows and particular dominant price swings. Look for extensions and retracements. Your pivot points obviously will be plotted still on this time frame, much like the 15-minute. Now you're going to be adding the kill zones. Okay, so you're going to be mapping time of day on this particular time frame. Your London Open kill zone, your New York Open kill zone, your London closed kill zone, and your Asia's kill zone if you trade Asia. Asian range will be on this time frame as well, and you're also going to be now implementing the average daily range on a 5-day basis. Okay, looking for targets intraday. Main focal points for this time frame is obviously looking to determine short-term intraday time frame support resistance, not only the higher time frame but its individual support resistance and dealing range highs and lows. You're going to be identifying the daily highs and lows in the previous 3 sessions. Okay, so in other words, not only are you looking at the high and low for today that you're trading, but you're going to be looking at the last 3 days prior. Why 3 days? Because it takes 3 bars to make a swing high and or swing low. And by having those last 3 days in relationship to where we are trading today, you can see where you are in relationship to that daily high or low that may be forming on the daily chart. You're going to be identifying key resistance and support based on Fibonacci and implied support and resistance, and looking for confluences on extensions and retracements. You're going to be defining buy and sell pivot zones based on the daily pivots, and you're going to be delineating the initial range high and low utilizing the Asian range high and low indicator between 0 GMT and 5 GMT. And in this time frame, you're going to be anticipating the manipulation, that meaning the Judas swing. All right, now that we covered what you would have on each one of your charts and each time frame, let's move over to an MT4 platform and show you what it's like to set up a template. And I'm not going to walk through every time frame, but I'm going to show you how you can add your tools to a particular time frame and save it as a template. So that way, every time you pull up a new chart, if you click the template, it'll load it automatically and all your indicators will be exactly the way they were the last time you used it. Okay guys, so we are looking at an MT4 platform, and this is an empty workspace right now. There's no chart set up for it. And we're going to more or less just set up the 5-minute chart and just go over the rules and outlines we just did for each time frame, and to set up your template for each one. That way when you pull up a different currency pair, just click on your templates and everything that you have on your chart the last time you use it or for a particular pair will load up as a default. Okay, we're going to look at the euro. This is an example. Okay, and we're going to take the grid off. We're going to change it to a candlestick. We're going to shift it over a little bit. We're going to add the Asian range, and we're setting it to 0 to 5 GMT. And obviously you would set it to whatever color you like. And set the time frame to 5 minutes. And we're going to add the daily pivots without having any support and resistance levels. Obviously, we're just going to leave it as it is here. And every time frame and all the tools that we would utilize for that particular time frame, you would have loaded on your chart. Now, if this is what you want to keep for your particular template, one more we forgot to put on here. Let's put the average daily range. Plot that as well. Okay, so now everything would be set up for today's trading. And if you wanted to have, obviously, the pivots with your mid pivot levels and such noted, you can use your GMT pivots. Now this is what you would have on your chart. So you go up to charts, go down to template, save template, and we're going to save this as the 5-minute chart, and you click save. Okay, now let's assume for a moment you close out your chart or just want to start a fresh one, and say you want to use the same template on the British pound. Same thing, just get rid of everything here and walk through and put all the indicators on again and waste time doing that, or just simply open up a British pound chart, go up to your charts tab, go to templates, go to load, or go down here if you have very little like I do here, just click the 5-minute chart. It'll automatically give you all your tools and applications, and you just zoom in and everything will be as it should be for your trading day. So everything that you would use for your 5-minute chart is already loaded, and you just simply do your analysis and trade accordingly. And obviously do it for your monthly chart, your weekly chart, daily chart, 4-hour, 60-minute, and 15-minute based on the outlines we shared in this presentation. And with that, guys, I wish you good luck and good trading.